The United States is suffering many consequences as a result of the current financial crisis. One of the biggest consequences is the housing crisis. As a result of the housing bubble bursting, Americans are experiencing awful repercussions. Foreclosure rates are higher than ever, and it does not look like there will be significant recovery anytime in the near future. In March 2007, more than 25 subprime lenders declared bankruptcy due to the higher than expected home foreclosure rates. This is because a large number of homeowners were unable to pay their mortgages as their low introductory rate subprime mortgages changed to regular interest rates. As a result, the United States subprime mortgage industry collapsed. Before the burst, as prices skyrocketed through the roof, homebuilders continued to build houses left and right. Everyone was able to obtain loans for the houses, but once the bubble burst, there were many unsold homes. This, combined with very few buyers, is one reason why home prices are extremely low and below actual value and worth. Foreclosure rates are ridiculously high throughout most of the United States. California, Ohio, Michigan, and Florida seem to have the highest rates, and currently there are an estimated 2,197,856 foreclosed homes. Also, about 1 in every 389 housing units received a foreclosure filing in October 2010. All of this is having a great effect on the American people. Now that lenders and banks have learned their lesson, they are making it so much tougher to get a home loan. This results in a lot less qualified buyers. And furthermore, because of how hard it is to obtain, let alone afford, a home loan, more and more people are finding themselves homeless and on the streets. An estimated one-third of homeowners with a mortgage owe more than their homes are worth. This is around 16 million people. Personally, I know my parents are extremely frustrated because they cannot even think about the idea of moving. This is because the value of our house has dropped dramatically over the past few years, and they owe so much more on their mortgage than the house is actually worth. Home builders have also been affected by the housing crisis. In 2005, 1,300,000 single-family homes were sold. Large home builders such as Pulte and D.R. Horton saw a huge increase in revenue. However, by August 2007, their shares had fallen to one-third of respective peak levels as new residential home sales fell. When lenders seize a home after foreclosure, they often put it up for sale in an auction. More often than not, it will sell for a price lower than its actual value and worth. This causes values of homes around it to decrease as well. Also, during the sell period, the house is usually not maintained. In this way, houses are also suffering from the crisis. Currently, the average price of foreclosed houses is $172,000. It is estimated that 2.4 million foreclosed homes will be added to the existing number by the end of 2010. This will drive prices down by another estimated 10%. As a result, it will bring the average decline nationwide to about 40% since the peak of the market in 2006. I feel it is safe to say that the current economic and housing crisis has resulted in many consequences throughout the United States, affecting almost all Americans in one way or another. We can only hope that the current crisis in CDO, subprime, alternative A paper, mortgage, credit, and foreign bank markets will recover soon.